And welcome back to the Mindful Marketplace here on Biz Radio US. I am Joel Skene, and if this is your first time with us on this program, we talk to the entrepreneurs, advisors, industry leaders, investors, and economic experts who are questioning the assumption that there's only one bottom line, and who are not only solving a market problem to make a profit, but also solving a social problem to make an impact. It's where we learn how to connect our money and our businesses to our values, our community, and ourselves. Today, I'm really excited to get to be talking with Jen Hampton of the Asheville Food and Beverage United. But first, we got to hit the balance sheet, the assets, liabilities, debts, and investments. So in the assets column, I want to talk about the new Urban Order report on improvements in transportation. So with the debate, between remote work and back to office continues, one interesting but often missed part of the discussion is how bicycle usage remains up since 2019 and has stabilized at about 37% more trips than before the pandemic. It's a huge increase, no doubt in part to the acceleration by the growth of e-bikes during that same period. What should cities make of this data? Well, I think they should lean into this trend and do everything possible to preserve the gains in biking. Too few cities are doing either of those things, honestly. The benefits of walking and biking are incredibly well documented. Not only is it a zero carbon mode of transportation, but it's a benefit to people's health and their mental health, and it can promote the economy. Moreover, since walking and biking benefits everyone from young children to senior citizens, from rich to poor, commuter, tourist, it is an equitable strategy. But big picture discussions about the direction of our cities rarely acknowledge that there are increasing barriers to people walking, like the rise of delivery or remote work and the decline of transit. Rather than focus on trying to manage delivery and remote work, what if cities put all their energy into making walking and biking irresistible? A radically different and better cities could emerge. All right, in the liabilities column, so I need to talk a little bit about private equity buying single-family homes. So I don't know about you guys, but have you ever looked at the housing prices right now and wondered who exactly is buying these places? Well, it turns out that it may not be your neighbors or even wealthy individuals moving to town. It may actually be Wall Street. The average worker in America only makes about $4,000 more a year now than they did back in 2000. But in those same 20 years, the average American home price has risen from an average cost of $168,000 up to a whopping $424,000. And in that same time, the average rent has gone from about $600 a month to over $1,200 a month. Renters now make up a much larger share of the housing market, and the average family spends 40% of their income just on housing alone. The cause of this drastic increase to cost to working families is that over the past 10 to 20 years, one of the factors in this is that behemoth private equity firms and hedge funds like BlackRock and Vanguard, who both manage over $1 trillion in assets, have been buying up not just apartment buildings and complexes, but single-family homes and becoming multinational conglomerate landlords. According to the MetLife Investment Management, unless laws are passed to restrict rent seeking by these hedge funds and private equity groups, who already have an outsized control of U.S. business, institutional investors may control 40% of single-family rental homes by 2030. All right, in the debts column. So I normally talk about the problem of debt here in America, either as a country or as individuals. But today I also want to point out what's happening with debt internationally. So the global economy continues to grapple with the lingering effects of historically high interest rates, particularly impacting some of the world's poorest countries. This phenomenon is a consequence of worldwide tightening campaigns that appear to be concluding. The aftermath is being keenly felt by low-income countries as global interest rates surge, making it more challenging to manage and pay off debt. Drawing comparisons to the debt crisis of the 1980s, the World Bank's chief economist has expressed concerns about the potential for these countries to face increasing difficulties if interest rates remain elevated. Over the past 3 years, there have been 18 sovereign countries defaulting on their loans, surpassing the total defaults from the previous 2 decades combined. Notable countries include Ghana, Zambia, Sri Lanka, and with Ethiopia potentially facing a similar situation. The ratio of external debt to gross national income remains historically high, particularly for the poorest nations, leading to an even higher interest payments for these poor exploited countries. This trend is diverting resources away from essential sectors such as education, health, and infrastructure, ultimately hindering economic growth and disproportionately impacting vulnerable communities. So if you are, by the way, if you are trying to pay off your own debt, I want to remind you that the Mindful Marketplace is providing all of our listeners with a free customized report on how to best eliminate personal and business debt based on your unique situation. Lots of families and businesses are using this report to eliminate all of their debt, including mortgages, in 9 years or less without spending additional money. So get free from debt by going to mindfulmarketplaceshow.com. And in the investments column. So I am really excited and proud to announce that the Mindful Marketplace here is partnering with Kevin Jones of Neighborhood Economics and Michael Schuman of the Main Street Journal, along with the American Independent Business Alliance and the National Coalition for Community Capital. We are going to be doing a twice-a-month webinar highlighting a different new innovative investment fund each webinar. Funds are going to include innovative housing solutions, community-focused commercial real estate, entrepreneurship as a path to generational wealth for marginalized communities, and shared business ownership and employee ownership in all its forms. So the American Independent Business Alliance, the National Coalition for Community Capital, NC3, along with Michael Schuman's Main Street Journal are all partners in this work that bridges race, class, zip codes to engage all groups repairing their local economies. So follow the Mindful Marketplace show on YouTube to plug into those live events. Hey, y'all, thanks for watching. I just wanted to quickly inform you about my financial services agency, which operates in the life insurance space. So we help families with debt elimination plans and create tax-favored retirement solutions. We support small businesses, nonprofits, worker-owned co-ops, unions, and social enterprises with employee and member benefits. We offer white glove insurtech services to community banks, credit unions, financial co-ops, and CDFIs. And we provide enduring acceleration and downside capture strategies for all kinds of investors. Check out the link in the video description and enjoy the show.